Good evening, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for Tuesday, and we're here at the 4th of June, 2024, about 6:57 p.m. Central Time. So we had the JOLTS numbers, the jobs, the turnover, what's going on. The amount of offerings fell, but two things happened. You revised the amount of offerings from the month before from 8.488 million to about 8.355 million. And then you took that number down to about 8.04 million. So as that happened, we're starting to see that the amount of new jobs is starting to finally shrink. We're seeing a real pattern set in because with the revision, we're starting to get the pattern down. The Fed has to be going grin happy. They want to see that part happening. People aren't changing jobs as much. That's good. We're not seeing wage increases go up dramatically. That's good. Now, tomorrow we get more jobs data. So let me just show you what you're going to get here. You get the Mortgage Bankers Association, but right after that at 6 in the morning, we're going to get the ADP numbers. And when they come out, we'll see what they're doing. They're expecting about 175,000. Last month they had 192, but these swing all over the place. Bit different than what the jobs report. And the jobs report comes out Friday. We'll get S&P Global's final release of their May service sector PMIs coming out in the market. So that's important, but it's the final number. It's just a modification of mid-month. ISM service sector coming out. So this is the PMI managers, then you get your service, you got the petroleum stocks. Bank of Canada's online to do something. The market's not quite a toss-up. Most analysts think the bank is going to go a quarter point, but the probability is only 65% the last I looked at it. It's not the same as getting like a 90% probability. This is what the market's really leaning into. Then on Thursday, we're going to get the European Central Bank stepping up to the market, and that's widely expected, almost 95% that they're going to make their first rate cut. Then we'll hear what Ms. Lagarde says. I would expect her to say, we're going to cut, we're going to look and see what it did, and then we'll decide what our next moves are, something along that line. The Saudis did a very bad job of selling the program that they put out to the analysts and to the public. And I mentioned this, I started Sunday night in my report, I wrote that, and I mentioned it yesterday, I'm still reporting on it. And that is because they could have easily said, conditions warranting, we will start rolling back in October and putting 750,000 barrels back on the market, conditions warranting. By not saying that, it sounds as though they're just going to dump more oil on the market. And that's what you're dealing with right here is the market's feeling that pressure. So I think that it was either they couldn't say it that way because other members wouldn't go along with it, or they just blew it. I don't know which. Bonds and notes, well, you can see you're sitting here about 435, 433 in the 10-year. The market is liking the fact that we are getting bad JOLTS data. So the JOLTS data soft. Now, if ADP comes in a little bit softer, if the jobs report comes in softer, traders will get all excited. But if the jobs report comes out strong, that throws off what the JOLTS did. It'll have its 5 minutes of fame, and then the market will pick on what was the weakest and go back and say, yeah, but that was then. Now look what's happening with this number. That's how these things work. Although they don't want to admit the JOLTS number is 2 months old. When we take a look at the E-mini, you're up for the week, 0.31. Does it feel like it? I mean, everything was down today hard, and this market came right back. You haven't gotten back under this big outside day to the upside. You also haven't cleared these highs up here. So that's going to be the battleground. Now, what the market is fighting, and I went and did some research, and I looked at it. Some people believe that the sell may go away begins May 1st. Others believe it can be the high point of May. You have the whole month to come out. Those that thought it was May 1st, they would instantly say, well, if you got out on May 1st, you made new contract highs, that doesn't work. Those that look at the end of the month are saying to themselves, well, hold on. You got to get back through that high to have it. Does it have any real importance? No. It's nice to talk about, but that's about it. In this market, if we get back over 53.15, and the market is trading right now at 53.11, and the 18-day average is 53.01, you will instantly turn the market to higher lows and higher highs. A close then over 53.02 for the first time in a little bit would throw us back into an uptrend. So it can be that quick. So keep your eye on that. If you get that, the next resistance would be in the 53.60 area, the upper Bollinger Band. Momentum still pointing slightly to the upside. Bias up, got to get over the 53.15 level, and that could do the job. Out of left field, this just came. In the NASDAQ, it's similar. If the NASDAQ were to get over 18,750, let's call it 756, just to say that. If it got over that and can close over the 18,660, so it's 18,756, close over the 1860 level, you'd be into your uptrend too. You'd have higher lows, higher highs. That is assuming, again, that the market doesn't get there and reverse back under the lows that we made today. So be careful, but that's what the chart action is looking like. In the Dow, the resistance, even if you got a rally here, is still going to be the 39,048 level up to 39,327. I say the market's too oversold to want to get short in the marketplace. It's been beaten down hard, and you're here. But again, when I look at all these markets, you still have the highs of May that you got to deal with. I've got them labeled on the charts. In the mini Russell, you got the higher high, lower low pattern. You're finding the support at the 100-day average in the lower Bollinger Band. But again, oversold, difficult markets, maybe a day trader's delight, but not a position trader. Even a swing trader is probably not having the best time in that market. Then when you look at the notes, you get up for the first challenge of a Bollinger Band. Bye-bye. You decide what to do with it. I think the pros will liquidate the positions up there if it gets to these numbers and say, hey, I'm going to get a look to see how does it react to the Bank of Canada? How does it react to the European Central Bank the next day? But I teach you don't buy upper Bollinger Bands. But what's happening here is the market is certainly out of the downtrend. The question is it really beginning an uptrend, or is this just a bounce in the market? Hard to say. It has been a difficult game. In the dollar, you're down into major support of the 100-day average, the Bollinger Band, and the 200-day without a trend. You lost the uptrend. You had your reaction to a lower low, and you're instantly oversold. I don't see anything to do there. And in the euro, well, whatever you're going to do now, what's your bet on what the European Central Bank's going to do? And not only that, how will the markets react? Because normally when you cut interest rates, are you betting that, hey, the dollar's going to stay up higher than I am? Is that going to be the strength? Or are you saying, no, we're going to cut rates. Our economy's coming back. This currency is going to get strong because of that. You're right at the cusp of that thinking. Understand what you've got. British pound is playing the same game. I understand that the first debate that went well, Prime Minister Sunak apparently in the polls did much better than Mr. Starmer, and that's important. And the market responded to that today. Now, if you lose the embedded reading with the red line closing under 80 and it's at 78.65, get nervous. If that happens on a close, you're probably going back to 127 to revisit support in the market there. Bitcoin is still got an overbought condition with upside bias and void of really running here. But as I wrote this morning in my report, I said, it can go sideways all at once, but it's holding the 70,000 level very, very well. Then when we take a look at the Brent versus WTI, well, it got, as we said the other day, probably a little too cheap here in the 4.25 area, having just come from 510, and you're getting a little bit of a bounce. Would I ever teach you to go short under a Bollinger Band? The answer is a flat no. Why? Because only 5% of the time do you stay outside of the band. So why would you want to buck that? The same thing in the WTI. Gasoline trying to get back into the bands. You had 2 days out of it and you're very oversold. Nat gas, Well, you just turned the market back down. So where did the market fail from? Today. It made its first move back to the 200-day average after having gotten under the 18 back here and right where it had resistance before it's seeing it. You've got to clear that high in order to get anything real super bullish going. As you know, I don't think you're going to take out these lows again in the near term. So all of this to me is noise in the market as you're waiting for the market to come alive from my point of view and everything. You put it together, you try to come up with the game plan, and that's what we try to offer you. You know, we put out a lot of research at Linn, and in the research, we really do cover a whole host of markets for you. So it doesn't matter if you're looking at the energies, the financial markets, the currencies, the metals, charts, ideas. What are the option strategies to do? What are the spread strategies to do with them? How do you get to see them? They come by email to you. They're also in our charting software you just saw go by. We focus a lot at this time of the year in the grain market. A lot of grain business is done through Linn Associates, a real lot of it. Soft commodities, including the cotton market, big reports that we put out, and a lot of technical analysis besides fundamentals. So if you're looking for trade ideas, this is one of the ways to get it. How do you get to see what our clients see? Well, you go to iraepstein.com. You can also move your cursor up here and go to free offers. You'll see, when you get there, you'll see a card of things you can just check off, get them sent to you. We give you a couple-week trial to see all that. I'm Ira. You have yourself a great evening. I'll pick up with you all in the morning.